All right, welcome back for another week of the watch list build. And we normally do this on Thursdays, but I'm kind of cramming everything into a Tuesday this week because I'm not going to be home on Thursday. I'm going to go, party over in DC, basically, Alexandria area. Taking a trip with my wife. We got to get out of the house once in a while, and sometimes we do it on a weekday. As for the market, man, this has been a crazy week, and it's only Tuesday, and we've had some fun price action on trading Q and NQ futures, and some of our newer members have been kicking butt trading this choppy garbage that we've been seeing on our 2 hour chart here, but it's making sense. That 1-for-1 down, nailed the target, bounced back, gave a half move yesterday, and then consolidated through the day, and now we're expanding from that. We have a pretty good shot at getting through this liquidity zone, maybe giving half of this entire trend back, or by some measure, maybe we hit that 462 pivot, which would be really cool. But for now, I think if we can get through this LZ here, we're looking for a return to about 460 and a half or so on Q. You might notice my chart has a nasty amount of dope on it. I've drawn all over this thing. It's just, it's looking kind of trailer park here. It's just like a yard sale or something. Um, lots of stuff to pay attention to. Yesterday we had that broadening pattern. It was pretty obvious. We had a perfect move to the regression line yesterday, even a step over it, and then a nice bounce into the close. I got long on some debit spreads that I closed this morning on the open. Did very well overnight there. Only made 300%. Damn it.
Oh well.
It wasn't one of those 2,000 percenters, but it was a pretty good play. I go so far the money on those and just dump some size into them, and I do very well with those. And on a close like yesterday, it was just perfect setup. I had to do it. It was a good shot. Got a little nervous in the pre-market that maybe I was going to break even or lose some, but then it just started trending. So I started scalping that with the ES in the pre-market. Did very well with that, and the open was kind of garbage for most people, but over at the Bullish Bears on our live session this morning, we had a field day with that. That range was beautiful. The setups, we had two really good setups and one okay setup, and then towards the end we got a even better setup. And I'll break into those real quick. Descending channel, pretty easy to spot. Just draw your lines on there. Regression boot right here. Traded that long. I just got out on a limit order out of that. Right back to our liquidity zone we went. And then, of course, in the opening, this stuff was very challenging for most people until we realized it was just range, and it was easy to scalp. Pretty easy measured moves in there. All the stuff that I do on my long-term swing chart analysis, I hone those skills on 1-minute charts and 5-second charts and sometimes 1-second charts, and you get a lot of screen time really fast when you do. And then you can glance at the chart and find anything. So, as always, feel free to throw us a ticker, even live. We will come back at you with some analysis. It flashed for some reason. I think I have some bike parts on a page behind that or something. um, let me make sure my YouTube's working correctly here because I got a little glitch on my end too. There it goes. Now I got the chat up. Cool. Welcome everybody. And if you want to throw us a ticker in there or even just to say hi, feel free. We're here. We love people.
And just on what you were saying about a crazy market, just remember a couple things going on. Tonight is the debate. Should not move the market, but you never know. Tomorrow is CPI, and market's now focused on the economy, but you get a hot inflation print and people start talking stagflation, and then things get really ugly from there. So keep an eye on that. PPI the next day, and then FOMC next week, and BOJ next week.
Yeah, it's gonna
So I mean, we're not going to let up.
No, and this week's gonna be very hard to swing trade. Let's just say that. But the day traders, when we find our groove, when we find our little short-term setups, we have a field day with this stuff. Volatility pays our bills. But yeah, it's going to be tricky as hell to get into some decent swings this week, especially with the debate tonight. I don't really care what politics are behind it, but I do know that there's going to be some sector rotation that possibly stems from some of the things that get spoken of in that debate. And throughout the rest of the week, you might see some good setups start to take shape towards the end of the week. And then with PPI, we'll get some volatility just before it. Typically, we can read from volatility a good output side of what can swing later. So um, our best bet for really good swing trades will probably be taking shape next week. And I think we're going to try like hell, if you can, maybe get on Tuesday next week as well as Thursday next week.
Yeah, ahead of FOMC. I mean, that should be usually Wednesday. So
That works. And then we get a pretty good read on the market before and after. And ideally, I'd love to do this twice a week instead of just once a week. But sometimes our schedules are crazy. And last week was no exception.
sometimes.
We get in on a call, or we got lots of things to do as just traders. We have enough to do, and then throw in some business stuff, and it really gets out of hand for us. So sometimes our schedule can be a little iffy, but for the most part, we're going to be here at 11:30 every week on Thursdays. We're going to try and shoot for Tuesdays as well, starting this week, obviously. Taking a hiatus on this Thursday, but you get the picture. We'll be around. We always give a call out beforehand anyway. So anyway, looking at the rest of the week, yeah, we're going to have this choppy garbage. It's going to be consolidating all over the damn place, and I'm starting to see the makings of a decent diamond pattern. If things fall apart today, we've got a pretty good shot at coming back to like 453, maybe even 452 for QQQ, and maybe consolidating through the rest of the day. And then tomorrow, it's going to be psycho. So brace yourselves, y'all. It's going to be a crazy week, and it's only Tuesday. It's already been a crazy week. Moving right into some stuff that you've been keeping up with, and that is the energy needed to supply the AI machine. And there's a few stocks moving that are really starting to take some shapes into some really good swing trades.
Yeah, this is a theme that I'm a huge fan of. And not just today. I mean, going forward, for AI to do what it's supposed to do. And I mean, I got another demo yesterday on what AI can do. I mean, it's crazy. I'm looking at launching an ETF, and this guy talked to AI about the ETF, and AI thought it would be successful. It's
That's
like,
cool.
really?
And it's not just blowing smoke.
But AI analyzed like everything to determine, yeah, you know what, this is a good idea for an ETF. So I had no idea. But for AI to work, it needs power. And I've been talking about power. Also yesterday I heard from some guys actually in the industry, and they're like, hey, whatever you think it's going to be, 10x it. So, one name that I've been on for a while is NNE and nuclear. I mean, it's going to be a wild ride. I mean, it's a small nuclear play. It's up 24% or so today.
Yeah, it's kicking ass today.
What's that?
It's kicking ass today.
Oh, actually, now it's only up 19. It was up 24 when I pulled the chart up for this like 10 minutes ago. Now it's only up 19. So it's a wild one. But I actually like where it is on the chart here too.
It's consolidating.
Right at the 10-day.
We get these big impulse moves, and we teach this a lot about price action analysis in our live streams even. When you get a big impulse move, you tend to have a high probability of giving half back before the next impulse move. So hands down, that's exactly what we're seeing here. Half back of this previous impulse. Bam, there's your pivot line. So, when we start seeing things get wild on a trend, and then we start looking left and finding the big time targets and noticing that's an obvious double bottom here. We've got market structure doing its thing. This is the second consolidation phase of what we'd expect. And, the primary move's already there. The secondary move can take this thing for almost a full reversion of the previous trend. So I like the trade idea. I like the trade setup. And I like the concept of, AI is going to consume a ton of power. It looks bullish as hell. And we just got to, we can scalp this range while it's setting up, and then also we can swing it later for some long-term stuff. And you got guys telling you, look at that, and then 10x it. I mean, that's one thing, and then AI backs it up. That's a good idea for an ETF. I mean, you kind of get in the cycle going of,
hey. You're getting ahead of me. We're working on
it. Exactly. And when things are looking that good for it, I mean, I mean, everybody has that bit of skepticism. That's kind of why we see these wild rides, and that's why it's great to scalp it as a day trader and swing trader alike. And then the setup is just it's primo. This is looking really good. I like NNE. And there was
The other one, so knee is a name that I've been trading for a while, and I mean that's just going up in a straight line.
right.
The couple I'm going to add to our list. One is GE Vernova. That's that's one Kramer talks about a lot.
Yeah,
Not as smooth as knee, but in a nice little uptrend here. I'd rather buy it on a on a dip into the 10-day.
right. Yeah, I remember distinctively we beat Kramer up a little bit on this one a couple times, and we were right on a lot of the choppy price moves that we were expecting, um, and then some. And then it came back to that liquidity zone and made that magic bounce. And then towards the end of our beating up on Kramer days, and we got into the watch list build here, we noticed this primary move. It was pretty obvious. There was a consolidation point, and now we're breaking into that secondary, and we're above the halfway mark. So follow through says typical market structure is going to take that to the next high. So I mean, a $215 target on that is pretty damn valid for the midterm here. And that's on a daily chart, so that's looking good. Definitely like GEV, and I
Yeah,
wonder when.
oh, go ahead.
I was going to say I wonder when we're going to get the Kramer bar when he says to sell it, but I think we've seen one. I still got to get Urban Dictionary to publish that, man. Come on, give me a break here. I know it mentions a specific name, but throw me a freaking bone here, man.
Right. But I mean, Kramer's not really a name anymore. Kramer's an icon. It's different.
That's true. That's true. That should be allowed then, guys. It's a technicality. Come
It
on, let me
should
slide.
be allowed.
But nonetheless, I mean, this price action's pretty wild. It's been great for some day trading and swing trading. And when we've completed half a measured move, we're likely to finish the other half of it, and we're consolidated. We're above it. It's looking pretty bullish for the long term and for the midterm. So I'm liking that one too. Good call on
Yeah.
that theme with getting into the energy suppliers for the AI machine. And yeah, I like it.
One more is Southern SO,
That one popped
and
up.
and they all kind of look the same,
That one popped up on our breakout trade scanner yesterday, and
which is weird when a utility pops up in your breakout scanner. But that's
yeah,
going to be the new world we live in.
pretty much. And you look left on this thing, they've been around and successful for quite a while, and it's just that chart just keeps climbing. Market structure occurred around this point. First consolidation, first attempt at reversion, second consolidation. It's all mapped. It's all done there. Now we're just in ballistic speed here. We've got the setup or the makings of a nice 2-for-1 measured move. The primary's already been played. The secondary hit its target, I mean, dead on today. And now we're looking like we might set up for a third measured move to push it up through 100 and maybe even outside of 113 here for a full 2-for-1 measured move. That's a beautiful setup, and it's already underway. I would love to see it consolidate right here around the $100 mark or around between the 90 and 100, and then give us a chance to maybe absorb some trades and maybe look like this here, and then give us another continuation move. But so far, man, this thing has just been a beast, and it's been pretty easy to trade. That's one of the ones where you look at the
Yeah, I
chart.
mean, all these utilities look the same, nice uptrend, not really participating in these sell-offs. Nice and easy to own.
Clean moves.
Yeah.
I like it, and in spite of what some of the what I call enviro Nazis might say, nuclear energy is pretty damn clean. Definitely cleaner than coal and natural gas combined. Cool, man. Yeah, I'm liking the outlook on that.
The last one I had on the AI theme is one that had not been on my radar screen. Now it is, and it's Oracle.
Ah,
I think you were in that today. I mean, massive pop. I don't own it, unfortunately, but I'll be looking to get in. Ellison made some really powerful comments about where they are as far as AI. which I think is, a big reason why it's doing what it's doing today.
And Oracle's been kind of through the last few years just an epic ride, if I must say so myself. It's been a bit hard to trade in this section here through the beginning of this year, but now it's starting to make some sense to where it's going. And I don't want to draw the big massive boxes and gray out my chart completely, but here's the weekly. You got the nice primary consolidation, did everything it's supposed to. You can see the obvious cup to the cup and handle here. There's your handle, there's your extension. That's all mapped out and done. Then we had the half back. We consolidated here, got our nice primary and secondary moves set up. Just basic price action did exactly its thing. We had this 1-for-1. I called this out on our socials this morning. I said we nailed it, and then it went a whole half a step higher, right to the next target here at about 160.50. Man, I took my profit right on the open this morning, and I don't mind leaving a little money on the table, but if this comes back and gives us another swing to go for a full 2-for-1 measured move, I'm down. And this thing has been kicking butt.
Yep.
Good setups, man. And looking at this, yeah, we're likely to come back and say maybe 155 would be a good second chance entry to take the rest of that step. I like it. Good calls all around. We will do our best not to injure our elbows patting ourselves on the back, guys. Another mention we had on there to review, a couple others in different sectors. One I mentioned a while back hit its target, and it's given half back now. This was kind of one that I received some skepticism on, but I had it down pretty well. It went a full half move up, gave us that pivot line, pulled back, so we've pretty much made that trade, but now we're looking for consolidation. Teva Pharmaceuticals there. I know there's some turmoil in the Middle East. This is an Israeli company, and you're going to see some big moves, but the trading has been pretty methodical. Look for support around 1675. Maybe if we finish this move today, we can get some accommodation for consolidation through the rest of the week. Maybe next week we'll get another swing back to half a measured move, so maybe see that $18, $19 extension once again. Another one I wanted to mention that was starting to look better and better, and then it sort of kind of hit the limit line and consolidated was PayPal. And you can see I've got some liquidity zones mapped out on it on the daily chart, but I'm looking for probably a reversion trade, so that the short is looking good to continue to about 65 bucks, maybe a little bit beyond. Weekly chart, market structure doing its thing. This is the, choppy as it may be, second consolidation attempt to break into a reversion trade. It hit that 74, almost $75 target beautifully and then back down. Kind of expected that. If we broke through that, we were expecting the next move to be higher up here to 85.90. But for now, we're set up for the nice half back, and maybe we consolidate in this range and get bullish overall in the long term. And you can kind of see some rotation in the discretionary sector that's taken shape, and I'll lead into the next thing I pull up, but I'm going to keep a sharp eye on PayPal, which is kind of the middleman for transactor in a lot of things. I use PayPal all the time. I know there's just about everybody uses PayPal. It's almost as it's almost
I
synonymous
use
with
it all
Google.
the time. I use it. I mean, it looks like there's some support. I mean, not great, but I mean, there's some support right around where it bounced.
It's not the happiest chart to trade, but
No,
I'm looking at maybe constructing some options income strategies on this if it starts to remain bullish in this trend, and if it gives back market structure for reversion. I mean, that's a pretty nice target at 200 bucks up there if this breaks out. So that's a lofty goal, but that's long term. It's got to break out of here and start trending before I'll really take into any size into it. But I think I like selling options on it because the premium's pretty dang good. So it's one of those where I like to either trade some debit spreads or just up and sell puts and calls and so forth on it. Sort of a kind of a half-assed wheel trade, if you will. But yeah, looking at this halfback, it's pretty obvious. We're looking for support around 65.50 or so, and then maybe we'll see some continuation after some consolidation on that one. Couple of Other mentions here, another medical stock I was looking at last week. You weren't around, but I was looking at MDT, Medtronic here, and that setup just,
MDT?
yeah, and that setup just played through very nice.
Wow.
Got the primary off the floor, gave half back, consolidated, broke its mean, gave a half measured move up, and now we're above it and consolidating, so continuation looks pretty strong in this one. Outside price
I don't
targets.
know. Oh well.
Looking to swing to like
For some reason, I
96.
thought I had it.
Oh, gotcha. It's one that we had talked about in the past at some point, I thought, when we were beating on Kramer, but maybe not.
Oh yeah, no, I'm sure we did.
It might be one that he mentioned, and we looked at the chart and we're like, it's kind of trashy. We didn't have any interest in it. And then I remember printing this primary move here to watch, and then I recently added the this move here and then the liquidity zones to it. So I think it was just one that we weren't necessarily interested in the chart unless this happened, and this happened. So now we're interested. So now we're looking at the secondary move playing out. I've got an obvious liquidity zone on the weekly here. There'll be some sellers here right around 95, 96 bucks, of course. And then if we follow through with the second half of this measured move, that's kind of in play. And looking at the short term, the 2-hour chart, it's starting to shape up into a flag. So give this maybe a couple more consolidation days at this range between like 89 and 91, and then maybe see if we can swing higher on this one. So the setup looks good. It did pop up on our breakout scanner last week towards the end of the week here, and I started looking at it on Thursday, and then during the show, I mean, right in the open there, it popped right on up to like 91.50 beautifully. Big wick, gave half that move back overall and consolidated as planned. So I can say we nailed it. That's part of that 94% accuracy rating that we give ourselves that we can go back and statistically prove. So watch for this thing to consolidate. Maybe we get some continuation out of it. If it breaks this 89 area support and starts to head for this LZ, just, cancel your trade. The idea is plan your trade and trade your plan. And if your plan crumbles, don't sit there and hold on to it. Let this thing consolidate and give us a signal that it's actually going to stay bullish, because every plan has a fallback and a failsafe. That's part of building your plan. Know when to get out if things start to give you trouble. Last but not least, I mentioned it a while back. I thought at one time we talked about it when we were beating up Kramer. We probably have. But Delta Airlines. I mean, I'm not a huge fan of trading airlines. I had been in the past. I think it was like 2021 to 2023. I loved trading them because they were pretty volatile. They're starting to show that again. This chart is just nasty, but this long term.
It rejected at the 200-day yesterday and again today.
Yeah.
But it's holding support at the 50. So it's it's wedged right now between the 50 and the 200-day.
It's set up for a bit of a reversion. If it holds this support and gives us an extension here, we got like 44.75 for a medium target between these two liquidity zones. It popped up again on the breakout scanner. This was last Thursday, and then today and yesterday we kind of hit the highs. So we made the A to B move I was talking about in this liquidity zone, even though we did already span that on Thursday last week. Came back, tested support. It gave half back of this trend. Pretty much did everything I said it was likely to do. I'm not going to just up and take credit for it following my plan and respecting my authority, but man, a good trade. Again, this is another one I took my profit out this morning. I'm done with it for now, but I'm going to watch for consolidation and maybe continue this later on. And if by some miracle the airline industry stays profitable this year, reversion trade's pretty well set up. 45 to 46 bucks is likely the outbreak target on this thing. And if things get really swifty, we could see even an extension back to one of the previous highs extend to about 50 bucks, maybe. But keep an ounce of skepticism on board with this thing. It's more of a day trader or overnight swing trader type of chart. This is very volatile, and again, this is one of those things where you scalp it and leave. It's not something I'd go full long term on just yet. I mean, this was good. Now it's just volatile. It's for traders. Day traders love it. Overnight swing traders kill it in this case. But yeah, just be aware that this is not, in my opinion, not investment grade. So if Kramer says to buy this anytime in the near future, hell no. Just scalp it. I only had like 2 pop up for today that I'm really watching. One of them already kind of played through. The other one's kind of set up to maybe make a play. I guess I'll start with Capri Holdings. This is the parent company for Gucci and Johnny Choo or whatever the heck that is. I'm not into that stuff, so I don't know. But made a nice primary, popped up on our breakout scanner yesterday, and it did break this range, and now it's continuing, likely to hit a half measured move target, which you can see there's some previous consolidation here on a daily.
Yeah, nice breakout here.
Looking for follow through to like 88.75, about half a move, and maybe get extended into the 41. But what this tells me though is the discretionary sector is starting to rotate a little, and that's maybe showing signs of some consumer strength. We did have what was it, the credit card debt numbers come out. It was like over twice what it was expected to be. So the consumer is still spending somehow, but man, somewhere the liquidity's got to stop. I don't know. Maybe we get some sort of executive order to throw some more stimulus packages together in the near future. Who knows? But watch tonight's debate, and you'll see what's shaking out of this. Maybe get a clue. But the consumer, man, I gotta wonder when this stretch happens, because yes, we're starting to see some rotation in the discretionary sector. This is certainly the elite discretionary. This is like the bougiest crap out there, right? So everybody's chasing Gucci. Here it is in the chart. Trade it, scalp it, make some profit, trade on their coattails. But would I go buy a thing that says Gucci on it? Not me. I like to keep things, in a frugal manner. I don't need a shirt that says Gucci on it. I like my Aussie shirt just fine, thank you. Anyway, moving on. Another one I was looking at, and we've beaten up Kramer to death on this one. Crown Castle. I remember distinctly, like we chewed Kramer's ass on this one several times. It presented.
Yeah, I remember that too.
Many trades.
Out here there now.
It's breaking out. It's finally coming to fruition. I mean, at some point, Kramer said buy it. We said short it. We scalped it. We prevailed. We did great on it. We knew where the liquidity zones were. Our price action analysis, we make it look easy, and in time, it becomes easy. Trust me, guys. We know what we're doing. When it comes to stuff like this, though, hard to trade for the average trader, but it's just one giant double bottom. Although L2 is higher than L1, it traded the mean, and it held. So we presented a nice primary and secondary move. And lo and behold, we nailed the half a move target. That 119.60 pivot is just beautiful. It's almost there. I think maybe we get some consolidation around there and maybe see it, fulfill its destiny of maybe hitting a 1-for-1 out of the park here and hitting that 127 and some change mark. But be skeptical, because this has been pretty parabolic for a couple days now. And, it did pop up on the breakout scanner again. This is one we beat Kramer to death on over and over and over again. We scalp it. Whenever Kramer talks about it, we trade the liquidity. In a sense, everybody who chases Kramer's dreams becomes exit liquidity for us. That's a horrible thing to say, but you know what? It's not dishonest at all. That's what we do.
It is not.
Our price action analysis trumps all of Kramer ever. So we find these targets and we trade them, and this is no exception. We've done very well on this one. So now we're looking to take profit at about that half move, and I think that 119.60 is about the limit of what we're going to see today. Watch for consolidation in the future on this thing. The rest of this week is going to be hectic, I'm sure, and next week we should see some smoother follow through. This will still be on my radar at that point. I'm loving it. We got a couple other things to mention. You had a couple launches.
I did. So this morning we launched 2 new ETFs. We launched ESGX, which is the shareholder first index. So yeah, not much of a chart. The idea there is it buys companies that are completely and totally politically neutral.
Okay.
And the thinking is that if you're a company and you're solely focused on making money, you'll do better at that than a company that's got multiple focuses. And and you've seen that a lot the past year or so. What happened with Bud Light? You've got a whole bunch of companies now that made massive DEI pushes, pissed off the right, pulled back from those DEI pushes. Now they pissed off the left, and they're in a no-win situation.
Yeah,
Everyone is pissed at them. So we like companies in this ETF to keep their head down and just do what they do. Uh,
that's ideal.
the second one is Guns, GUNZ, and it's the Tuttle Capital Self Defense Index. The idea there is that the crime numbers you're seeing, I think, are just like the jobs numbers. They're wrong. And where the jobs numbers overstate, the crime numbers understate.
Agreed.
We are getting less and less and less safe. And you've got people out there talking about defunding the police. People are going to have to take self-defense into their own hands. So we think this is an area that could start to see a lot of institutional interest. So, we own gun companies, we own ammo, but we also own non-lethal, pepper spray, tasers, home alarms, and I believe we have the largest Palantir allocation of any ETF out there, except for the one that trades just Palantir. So that's interesting as well. So excited for those two launches.
Nice. And congrats.
Thank you.
That's a huge endeavor towards doing the right thing in the market space as well as in the trading space. I mean, that's going to be, I think, some good ETFs to trade. And I'm you were talking a little bit about AI, kind of giving a couple of clues as to expectations of performance and stuff, and it kind of agrees with you. So that's a good thing. You
Yep.
you get into and I'm going to go back and look at a couple of the other T-Rex things since we have a couple minutes. Um, one
Micro strategy, hopefully next week.
Okay,
2x micro strategy, hopefully next week.
sweet, even better. I'm
We,
gonna
we, we were thinking Friday, so the Rex side of T-Rex put some stuff out on social media. I mean, they only said coming soon, but the SEC threw a monkey wrench into that this morning.
oh boy, more paperwork. I was
Yep.
looking back on the idea that I have with trading the or running the wheel trade strategy on leveraged ETFs. I mean, has played out very well with one that I'm well experienced in, and that's running oh dang it, TNA. That is a leveraged small cap ETF, and I've been averaging about 18% a month on it on premium, semi-passively trading it. Like I'll sometimes buy to close contracts, but other times I just kind of step away from it and let it do its thing. And if I get assigned, cool, I can sell some more covered calls or cash covered puts, whatever have you. It's been maintaining steady performance, even though I'm not as actively managing it as I would on something with more volatility. But what it comes down to is you take something like TSLT, for instance, and I'm noticing that the liquidity is coming into the options chain on that very beautifully. I think very soon it'll be right in my ballpark of I want to wheel trade that. Have you seen some more inflows coming in between that and Nvidia?
I mean, the inflows are all over the place with the market.
Yeah,
We saw a lot of outflows on Friday, and and we were told from the trading desks that, I mean, people were just like, hey, it cost us money to hold over the weekend. We could have a Black Monday. We could have a rally. We have no idea which. So screw it. We're out.
sure.
We saw some of that money come back yesterday. Typically we see people buy the dips. So like on a day like today, we would look to see like, sellers of Tesla T and buyers of Tesla Z and buyers of NVDX and sellers of NVDQ. But, with all the stuff that's going on, who knows what people are thinking at this point.
Right. It's hard to gauge sentiment of what people are thinking, but I've noticed in the past couple of weeks there's been a little bit lower participation in the market overall, and a lot of people will put out there the fact that algos keep the prices flowing, they keep money moving in the market, so to speak, so to provide some
Yeah.
liquidity. So I've noticed that the less participation people put into the market, and the more participation algos will put into the market, so to speak, you tend to see that influence from algos make price action easier to read for a day trader and a scalper such as myself. Um, and it just makes it so you look like you walk on water when it comes to trading. And my live streams have been just absolutely crushing it for like 2 weeks straight now because of that. But I've noticed that when you get a little chop going into an expected news event, like tonight we've got the debate, we've got CPI coming out, we got some more data coming out as time goes on. Every time you lead up to one of those news events, you get some stuff that's a little harder to predict, and you end up having to step back and look at a longer time frame and figure out where the swing moves are. A lot of the equities we trade give us those clues as to people sentiment side of it. But in the meantime, you get some overnighters and some day traders making those flows for you during the day, where you see things change from long to short, and it plays right into the ETFs or right into the equities that they're based on, which is cool. But in my long-term standing on that stuff, I love to sell premium to speculators, and that's kind of what I do with the wheel trade. I'm literally looking at the edges of the market, figuring out about where the price range is expected to be, and I'm selling calls above and puts below, and walking it through price action. In a sense, the more options trades you get on stuff like NVDX and TSLT, and the other one I'm starting to notice is picking up a little bit is SKRE, thankfully. Eventually, when those have that kind of liquidity, it'll be a no-brainer to wheel trade those, and that's why I'm kind of beating on the idea of producing a really good log of what I've been trading in TNA, and then comparatively, I want to bring that into percentage performance of what I can expect from NBDX and TSLT for that matter, and then being able to trade both sides of it too. So like you can go and wheel both the long and the short ETFs. Yes, over time they do tend to be diminishing assets like years from now. I mean, you're probably one of the lowest percent fees in the leveraged ETF market industry sector.
Yep.
Long term wise, I can see some outcome on that where if I'm averaging 18% on TNA, and let's say speculatively NVDX produces 20% because it's volatile, obviously, and then NVDQ can also produce 20%. If those kind of balance for me, that's huge. I'm in a net neutral position with a slight diminishing asset over the process of years, but I'm returning extreme percentages of premium in those positions as time goes on, yet I'm net neutral. That's the point I'm trying to make is it's going to be a no-brainer for the traders and long-term investors to kind of see that and realize the potential there to produce some really nice income strategies that can play out for years, and you just keep swinging them.
Along those lines, let me tell you, how I like trading these things. So I'm more directional, not income. What I like to do is if let's say I've got a signal to go long Tesla, I might do a call credit spread on Tesla, use that credit to buy an option on Tesla T, a call on Tesla T. You need a big move, but if you get a big move in Tesla, you make money. If Tesla goes down and it goes down under the Tesla calls you sold, you have a zero. So you didn't make, you didn't lose.
Right.
I like those types of strategies where, if I'm wrong, I don't lose anything. And if I'm right, I make money.
I do a lot of that with what I call a swap strategy, but it's more of a conversion, um, much shorter term though. So like I'll go and get either a call or a put on SPY or QQQ similarly. And instead of just day trading those contracts, I'll turn them into a can't lose spread. So I'll grab, say I'm long a call and I'm sitting at anywhere above 100% return on that call. I'll sell the next strike put and lock in anything above 100% of that call as profit. I can't lose that. And if I'm right and the direction continues the next day, I make a lot of money, but I can't lose overnight. I've locked in my gains on that. I sacrifice 100% in doing so, but I can't lose
Yeah.
anything above 100%. So kind of a similar strategy, just over a longer period of time. So if you're playing the swap, that's a good way to do it. You can utilize leverage ETFs to do exactly the same thing without having to put as much outlay on the table, which is kind of awesome. That makes sense, and I think with more and more people realizing the ability to take advantage of the options market, and we've seen a lot of the options market is affecting a lot of the price market, and there's been some people I know personally complaining about that, like the options market is influencing the equity market too much. That's actually not a bad thing if you think about it. People complain about not being able to get ahead of the game, so to speak. Well, you're
Yep.
complaining about it doesn't get you anywhere, but jumping into it, just if you can't beat them, join them scenario, it makes sense. So
Yep.
a lot of people who are complaining about the options market affecting the equities market too much, learn to trade options. Join them, and
Yep.
let the algos deal with the equity. That's kind of what they're for. So, in that sense, I'll start learning some options trading, and I'm gonna be getting into a lot more details on different option strategies that may seem complex, but once you've done it a few times, it's like riding a bike. They just become simple, and simple is fast and efficient, and also simple is easy. I mean,
Yep.
take advantage of it. Anyway, to kind of say another toot my own horn scenario, this purple line on Tesla was my analyst target, 233.95. It played through at 234.99. It jumped it by $1, but man, was I right. Now we're coming back. We're breaking through the reversion line. Probably going to find support on Tesla around that 217 area. So long term, we could see another swing back to this high. Just kind of call that out. And if it rejects that again, we're in trouble because Tesla could start seeing back to the $200 mark, unfortunately. So if you're trading Tesla, be nimble in this market. It's going to be very volatile for at least the next couple of weeks. But the outcome is,
JP Morgan.
yeah.
I didn't notice that.
Oh, did JPM make a move? I've been
Yeah.
Wow. Holy smokes. That's like a Kramer bar right there, man.
Something's going on there.
I know the regionals were getting spanked this morning, but I didn't expect JPM to take a hit like that. Holy smokes.
Yeah, Scree's up almost 5%.
I was just showing that in my live stream this morning. Yeah, man. Watch that 2-hour chart. If we print doji here, maybe we'll get half back. That might be a good scalp opportunity. But
I'd look at the news first. JP
yeah,
Morgan doesn't go down 7% in one day.
no, not
On a
usually.
day where the market's, the market's down 50 basis points now, but
Broader market
still.
sees pressure from weakness in bank and energy stocks. Okay,
All right.
that's an article. I don't know why that would drop this thing that far, that fast, but okay. I mean, that's almost a Kramer bar.
Yep.
Wow. Well, we'll have to pay attention to the banks here. I think we might have some good shorts on our hands. SKRE's kicking more butt. I pointed a little bit out
There we
about
go.
that this morning. I had this really nice measured move block here from the daily chart, but then we've got a nice clean double bottom that broke above the mean. So SKRE is looking pretty dang bullish, so you guys know. My friend Matthew here manages that fund, but it's doing good. 2150 is my extension target if it breaks through the mean, and so far it's plugging away at it. 2020 is about halfway there. So we could see a nice day trade play into the close on that one. Good deal. A little low volume, but hey, that's okay. Price action trumps volume any day. Just switch to HA candles if you must. That's all a lot of green. Anyway, I think it's a good time to sign off on that, man. We kill it, and if you go tell your friends, we can all kill it together. I'm going to stand by our data points, crunching down all the numbers every time we've done this every week, whether we're bagging on Kramer or doing our own thing with the watch list. 94% accuracy on our callouts. That's pretty damn good. Go tell your friends. Hit like and subscribe if you like. Hit the bell if you want to, know when we're coming on every week. Watch our socials, that sort of thing. We do announce it, but we're going to continue killing it, and we're shooting for doing this twice a week, Tuesdays and Thursdays, coming soon. So. Depend on Thursdays. We tend to be here at 11:30 on Thursdays every week, but we're going to start trying to do Tuesdays as well. So we'll play it by ear for now, but in the meantime, that's our goal. We want to be here twice a week. Thanks again for joining us. We'll see you next week. Thanks, guys. Have a great weekend, and be nimble out there. This market's going to be pretty nasty for